All right. Welcome to our Market of the Moment update, week of May 9th, 2022. Michael Oldham with Guaranteed Rates, Chris Madrid. What's up?
Hey. What's up?
Not much, man. Living the dream. Real estate dream, just like
Hooking and jabbing.
Dream.
Hooking and jabbing for sure. Absolutely.
All right. Well, we're ready to get into some market updates, some interest rates updates. Let's get going with Chris. Talk about our current rates, trends, and we're going to look at mortgage-backed security chart again. We talked about it last week. We're going to get an update on that today. So take it away.
Very good. Yeah, thankfully, interest rates have they've bounced back a little bit this week. So a lot of the negatives that we had last week, we've gained some of them back. So if you're if you're on the fence, this is a good week to lock in a rate. So we're down in the 5.25 to 5.6 range on a 30-year fix today. This is just great. I'm giddy. Just because we haven't seen rates in these levels for a little bit. So yeah, so I mean, if you're on the fence, if you have the ability to lock in, if you're doing new construction and you need to do a 120, 180, 270 day rate lock, this week's probably the week to get after it, because again, overall I think we're still trending for mortgage rates to tick up a little bit between now and the end of the year, right? There may be some little blips like we've seen here, where we'll get some slight dips over the course of the next few months. And again, we capitalize on those dips, right? So that we let our customers know, hey, it's probably a good week to lock in. Like, I'm making tons of phone calls this week, have locked in a bunch of rates this week, just because it's hey, we'll take every dip in rates that we can get. So great week to lock in. It's Thursday. You still have another day to get off the fence and get your rates locked in.
Yeah, I was just having a conversation with someone yesterday. I continually are getting people, people tell me this isn't the right time to buy and things of that nature. And I tell anybody right now, if you have the ability to buy, you need to be buying. It's probably a financially smart decision right now. Absolutely. To be buying. And if you're in the need for a home, definitely now is the time to buy, because values are going to continue to go up. Mm-hmm. And as Chris says, these mortgage rates are most likely still going to trend slowly up. They have hit 6.62, haven't they, in the last couple of weeks?
6%. I think we got pretty close to 6%. Some, of course, there's always going to be the kind of the outer line. I saw, crazy enough, I saw some lenders up to 6.5. So that's, again, there's always going to be a quarter to a half a percent swing, here or there. But yeah, we did see, like on our side, we did see as high as 6%.
Well, I know Amy was excited. I know we got with yourself 2 or 3 of our buyers got locked in. Maybe under 5. I think, but yeah. Anyway, so Amy, particularly, I say the Oldham team, but that Amy's very big on. She's been keeping up with these mortgage rates, keeping up with our buyers that got qualified in the 3% range back at the end of 2021. Yeah, their house is going to be finished until the summer of 2022, and rates have literally gone from the mid 3s. I think when we were talking in November, like Chris said, they have hit 6, haven't really stayed there that long, but you can go from qualifying at one rate to not qualifying at another.
Absolutely.
And Amy's fear was, we're going to sell these people's house. They're not going to qualify for the new build.
Yeah, they're going to be
homeless.
Right.
And
absolutely.
so, that is definitely something you need your agent thinking about for you. You might not be thinking about it yourself, but things change when that rate changes. So I know Chris wants to look at the mortgage-backed security.
Yeah, mortgage-backed security chart, just to just to give some perspective. Yeah. And you'll notice on here where you can, we'll get to the chart and you can kind of follow, Oldham, put your little, put your cursor on the blue line and we can kind of talk through.
I'm trying to get it up.
Let's get that thing into Zoom. Come
I'm
on, baby.
trying.
Come on, tech gods.
Chance.
Let's see. Yeah, I mean, you're still, there you go. So you're still, you know, that top line is the 200-day moving average, right? So that was, we can see how far away we are from that, right? And then the purple line is the 100-day moving average. The black line there is the 50-day moving average. And then the 25-day moving average, I mean, you can clearly see that's, you know, a lot of the peaks there, right? Where we're seeing these peaks fall. It's just, I mean, that 25-day moving average is just, is essentially where we're seeing all the movement now. So we can clear, you know, if we look at that May 9th date, right? So you get some red and some green. Green is always, you know, green is always positive typically, right? Green means go. So anytime we see the green tickers there is because we're, you know, typically mortgage-backed securities are going up in yield, right? Or in value. So oftentimes we try to really capitalize on those peaks. And then anytime we get a you know, a significant red notification, like if you're looking at that May 9th date, and you're looking at those two next you know, red blocks there, anytime you see a significant, you know, dip like that, we're either floating, right? If there's some market data or some market news that's coming out that may potentially impact you know, mortgage-backed securities. So we're either going to float or advise to lock, right? So where we're at today, we're still, man, we're still getting a lot of those gains, right? So mortgage-backed securities, I think as of right now, we're up 28 basis points on the day. The 30-year 4.5 coupon sitting right at 101.42. And again, talking about this little chart here, we got back. So May, I think that was May 7th, May 8th. We got down pretty close to 101, and it may have dipped below 101 at that point, right? So that was last week. We saw, you know, mortgage rates were kind of at you know, their highest levels. So we've come up a little bit from that. So, man, thankfully, we'll take it while we can get it. But there's no guarantee that obviously rates are going to stay at these levels. And again, we fully expect them to continue to creep up a little bit before we hit that recession, right? At the end of the year, early part of next year. And then next year we'll see rates dip back down a little bit. So again, at this point, you don't want to spend a bunch of money in points and buying down the interest rate, even though, you know, there's a rate that looks a little bit better. It's just not a good idea, right? Because most likely you're going to be refinancing next year. So you definitely don't want to double up on your costs by paying points. If somebody's pushing or encouraging you to do that, it's just not a good idea. You need to talk to somebody else.
Yeah. Always good. All right, let's get into our real estate trends. We were talking before we started, have a little bit of movement in some key areas in the market. So Collin County, we actually saw sales price to list price drop by, you know, 1/10 of a point. Maybe this was Mother's Day weekend. We had 2 listings go on this weekend. You know, one was hot and heavy, one was a little slower. You know, here in Frisco, as far as showings go, also 55+ community. So there's just a smaller pool of buyers in that bracket anyway. But 5 days on market, once again, the same. I don't know that we can get much lower than that. You know, the house, one of the homes we did have on the market, we got under contract in basically on that 5th day. So Denton County, once again, trending much like Collin. You've got 7.3% over list price. That did tick up just a tad in Denton County. 5 days on the market. Once again, same reasons as Collin. and then 0.8 months supply. So both Collin and Denton dropped in supply. As we look down the chart, all of our counties dropped supply. Last week, I think all those were positive numbers. We had our supply had gone up. Dallas County has moved a lot. We were talking before we started recording. In the last 2 weeks, Dallas County prices have gone up 3% in sales price to list price. Last week it went up 1.5%. This week again another 1.5%. So we're up to over 5% list price. Like we talked last week when Chris and I started this, Dallas County was someplace you could get a home at 99% of list price, but now it's climbed 6 to 7% since we've started. Yeah. And the month supply, the inventory in Dallas County is dropping, as in every county. It's down under a month now. Grayson County up to our north, list price rose a little bit last week. It's up to 1.4%. I bet next week it'll be up to 2% over. 7 days on market, which dropped significantly as we talked. As we talked last week, that means the market's getting more competitive. When you go from 11 days on market to 7, that means buyers are coming in more aggressive. Sellers are getting offers that are more enticing to them early. And so they're going off the market earlier. So I expect that number in Grayson County to continue to fall till it's down to 5 to 6 days on the market. Still got 1.7 months supply up there, but that's even dropping in Grayson County. Looking at our little outlying counties from us, Tarrant County, Fort Worth, you're up to 5% over list. That stayed the same as last week. 6 days on market stayed the same. And inventory in Tarrant County dropped by 1/10 last month or this last week. Parker County, I was telling Chris, Amy and I were out in Parker County yesterday. You can just obviously see more construction going on out there. Don't know if it's because the land's a little cheaper for builders, what the case may be, but you just see more sticks on the ground when you get into Parker County, which is Weatherford, Brock, that area. 11 days on market stayed the same. 1.5 months supply actually did drop a little bit. And then Rockwall County might be the best place to buy in the DFW market right now. Homes staying on the market just a tad longer, and even ticked up last week. You're only at 3.5% over list price, and you've got a little bit more supply in Rockwall County, because I also think like Parker County, that east side of Dallas, starting to probably get more sticks on the ground. There's a little more available land, things of that nature. So anyway, I wanted to move on to some news we've been hearing. We're hearing a lot about obviously inflation. We're hearing a lot about, now we're hearing about a coming recession. And then we also are hearing a lot about foreclosures and things of that nature. I just really wanted to touch on it. We've
fake news at its finest. Fake news at its finest, man. Come on.
Fake news at its finest.
Jeez.
I don't believe, we talked about the foreclosure and things, but we hadn't really shown data to it, why we are not where we were at in 07, 08, which is what this is basically gets compared to, a real estate bubble, a housing bubble, things of that nature. So first of all, we talked about builders don't have 5 million homes on the ground available right at the moment, like they did in 2007 and 8. So that's one of our very first points. But just looking at home ownership right now and how that would affect foreclosures. So first of all, there are few homeowners in trouble in 2022 than in 2007, 2008. Chris knows this is because lending practices changed tremendously after 2007, 2008. Documentation you have to show, all kinds of different things. I'm sure the lending ratios to debt and things changed. I don't know all of it. I just know things were changed, laws were passed to make sure this didn't happen again from a mortgage side anyway.
Yeah.
I really think 2007, 2008 was more of a perfect storm of builder inventory and the mortgage issues. If it would have just been one or the other, you probably don't have that crash.
Yeah, yeah, and ultimately it was an oversupply, right? I mean, builders and I mean they were building more homes than there were people to purchase them. So I mean, huge swing in oversupply. And then ultimately, you know, the payoffs in arms, the stated income, stated assets, no income, no assets, loans were rampant, right? So essentially, if you had 700 credit score and no job and no money, you could get a house, which was craziness, just utter craziness. That's foolishness, right? Where now we're still verifying, in order to be able to get a QM loan, right, or a qualified mortgage, what the government is called a qualified mortgage, we have to verify credit score, income, employment, assets, right, down payment, where all that's coming from, and then ultimately we have to confirm your ability to repay the loan. So so your traditional mortgage companies are not issuing loans that won't, at the end of the day, that a customer will not have the ability to repay that loan, right? Now there's always these compensating factors and things that we can look at. Now it's guidelines are starting to loosen up a little bit to where you where you can qualify if, let's say that you're self-employed and your CPA gets a little too pistol whip you with your taxes, and you write off a majority of your income. Well, there's still bank statement options where we're still verifying, hey, you have these deposits coming in. We've shown over the last 12 or 24 months that you have these deposits coming in, right? So there's still a or a type of verification where 2005, 2006, 2007, literally it was, okay, you have a 700 credit score and no money down, great, sign here, we'll get you get your mortgage and move you on down the road. And that doesn't happen, right? So it's a totally different, again, we're not oversupplied right now in homes, and lending practices across the board are 100 times more. There's just more hoops to jump through, more I's to dot, more T's to cross, right?
Yes. So if you are, if you're in the middle of getting a mortgage, it's not fun, but you can rest assured that you're not going to buy something that you can't pay for, most likely. So,
right.
So as we look at this little pie chart here, whenever the forbearance program was instituted and put in place that allowed people during the pandemic to basically not make their payments, and then banks had different ways they could work with you. They could make you pay everything back at one lump sum. They could spread that out over some years and increase your payment, or they could tack it on to the end as a second lien, I believe, that would, be paid off later. So different ways that work that you didn't have in 7 and 8. So anyway, as you can see by this chart, 37% of mortgages were paid in full, even during being in forbearance. So even though the mortgage might have been in forbearance, the homeowner was making that payment normally, 37%. 44.6% of the forbearances got worked out through those 3 plans I just said, and repayment has started and is being made, and everything's back on track. And then if you look at 18.4% of mortgages are still in trouble. And then if you just look at, there's a sliver of 1.3% that could fall into short sales, deed and liens, and those types of things. But 18.4% is a very minute number. Anytime you do anything in business, you tack on a 20% screw up fee in there. If you're remodeling a house, whatever you think it's going to cost, you add 20% to it. Whatever you're going to go do to your car, you're probably going to pay 20% more than you thought. So 20%, I think, is just pretty much probably a normal average number for people that are having issues. Let's move on to the second reason why this foreclosure news we're hearing is just news. Average equity gain over the last 12 months. So homeowners national average gained $55,300 of equity just in the last 12 months. So that means if they are in trouble after forbearance, they most likely have the opportunity to put that home on the market and still be able to pay off the bank what's needed and possibly even make a profit. Here in Texas, in the last 12 months, our equity has grown by 45,000 on average for homeowners. I would say in this Dallas DFW market, that number's probably closer to the national average, if not over that national average. I was telling Chris a story earlier. I know someone that bought a house just before the pandemic, went into forbearance, never made a payment on the home for 2 years, I believe, filed bankruptcy, sold the home before it was foreclosed on, and was able to actually make a $33,000 profit after paying off all the forbearance fees and things back to the bank from the original purchase.
Jeez.
So
yeah,
that is just an example of if people can't make this arrangement plan that the bank is throwing at them, they most likely have the opportunity to put it on the market and make money, most likely.
Absolutely.
And then lastly, the last thing I want to touch on is there's just been fewer foreclosures in the last 2 years than even prior to the pandemic when these things were put into place. We had, I think in 2017 through 19, probably had a pretty friendly banking system, I know, and things. So seeing that, I know it was the government programs these last couple of years that kept us and kept these foreclosures from happening. But the fact is, you keep hearing all this news of foreclosures and homes are going to flood the market and things of that nature. It's just simply not true based on these last 3 slides that we talked about. Do you have anything to add to that, Chris?
No, I mean, yeah, I mean, it's one of those things where you look, I mean, you look at those numbers, and even the 2017 number, that 314,000. I mean, again, those are purely, when I'm looking at this chart, it's a significant number, right? But it's not that significant in comparison to the amount of, homes that are financed, right, and are paid on time and stuff like that. And again, you just have, in some cases, you have just extenuating circumstances of when people unfortunately have to lose their homes, and that, I mean, from 2017, lending guidelines really haven't changed much, right? They haven't gotten more difficult, or they haven't loosened up either. The biggest thing that we saw in, obviously 2020 was the forbearances, right? And that was, a 3, 6, 9 up to, I think, a 12-month, for like some servicers were doing 12 months forbearance. And again, that number, from 17 has dropped significantly. And then even last year, right, 38,000 foreclosures in 2021 versus 300,000 in 2017. So, and again, in 2021, I think after July of 2021, all the stimulus ended, right? So after July of 2021, so the fact that there was only 38,000 foreclosures in 2021, and essentially there was no more government assistance per se, right? The stimulus, or whatever you want to call it, is pretty darn impressive. And again, it speaks to the fact that there's just not, again, all the things that we hear and people say all the time of like, hey, there's going to be a ton of foreclosures, home values are going down. It's just, again, the data shows that that's not accurate, right? You might hear it on CBS or CNN or all, these places that like to fear monger and stuff like that, but that's just not going to happen. The data supports that it won't happen.
That is true. All right. tons of news out there. Reach out to Chris, Amy,
Don't
or
fall for the
I.
fake news. Don't fall for the fake news.
Don't fall for the fake news. Here's our contact info. Get that down. And all right. Knocked out another week. Keep our
Byron Nelson going on in
Byron
McKinney,
Nelson here, McKinney,
Texas,
Craig Ranch.
this weekend. Yeah.
Staying away from Custer Road. I literally could almost throw a golf ball over there. I'm not that far from it, but I probably won't be attending. So